Hi, you're back now. Can you hear me? Can you hear me?
Yes, yes, I can hear you. Yes, I can hear you.
Okay, great.
So I think, so what I was
Thanks.
trying to do, I was trying to switch the network because I guess the whole thing with the rain started affecting all of that.
Oh, okay.
Great.
So
Okay.
would you want me to share my screen? Let's just test it.
Okay, yes, definitely.
You need to make me a co-host, I guess.
Okay, I'm just going to do that right about now.
But you need to make me a co-host so I can do that.
You have now
Okay.
been
So here. Yes, please. Okay. Great. Can you see my screen, please?
Yes, I can see your screen. Yes.
Okay, great stuff. Okay, thanks for having me, Sam. When you're ready.
Yes, we're ready to go. So just go ahead. We're trying to ensure that we stick to time because we're very, very conscious about time. So please, you could just go right ahead.
Okay. So good morning, everyone. Thank you for the opportunity of having me here, David, and it's my pleasure. I usually enjoy speaking with tech entrepreneurs because, I mean, for me, without them, I can only imagine where we would have been, right? Or how we would have managed the current situation we found ourselves in terms of working remotely or having to still carry out our function efficiently while passing through what we've passed through. I mean, case in point, we won't be having this conversation now because we'll have been limited to how can we find ourselves in an enclosed place, right? Be able to speak to each other and still be able to embrace the social distancing provisions available, right? So it's another opportunity for me to speak to you guys that have innovated so much and made life easy for us because everything you do, whether the fintech space is ability to make transactions from the comfort of our home or the health tech or the law tech and what have you. So I'll just be sharing some of the things we embraced while launching and also operating as Farmcrowdy, right? So please bear with me, and if there's any questions, I will encourage you to drop your question using the Q&A icon on the dashboard, and then create that time to be able to attend to some of your questions. So we're speaking on tech, tax, and compliance, right? And I thought, look, let's have some fun. Let's remind ourselves where this whole tax story started from, right? So, I mean, it's interesting. I'm starting with 5 interesting facts about taxes. The word tax is derived from the Latin word taxo, which means I estimate, right? So which means, I mean, I'm trying to imagine when it started, it was a matter of whoever the ruler was then saying, look, I estimate that you should be able to pay me this periodically for whatever reason, right? So that's where, so now we're used to just saying taxes, 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 but it came from a Latin word called taxo. Another interesting fact, the earliest known tax was implemented in Mesopotamia about 4,500 years ago, where people pay taxes in the form of, I'm sure you would have imagined, in the form of livestock, which was the preferred currency at the time. But I wouldn't say which might have been the only currency then. I would have imagined it was a situation or period where it was you engage or you consummate your transaction based on trade by barter. So I have rice today, you have tomatoes. I'll exchange from what I think is the quantity that ties to the value of the rice you have. That was the earliest known tax recorded. Another interesting fact, direct taxation came into existence in Nigeria, right? Which is our focus right now, before the advent of the British rule. So it actually existed before colonization. That was new to me. I thought it came through colonization and was, I mean, from in 1861, particularly in the north. So the north was, I would say, they were ahead of everyone else in terms of introducing and implementing taxes. And I can probably imagine was also trade by barter at that point in time. So you pay your taxes using certain commodities you're dealing with at a point in time. Another fun fact, there were various taxes, so there were various forms of taxes in northern Nigeria at that point in 1861, such as Jangali, which is a cattle tax levied on livestock. We all know that to date, the northerners are known to be good rearers of livestock. And another one is called Nkasa, an agricultural tax. I guess that encompasses maybe some crops also, which will have been doing well, thrive in the northern parts of our dear country. Finally, another fun fact, an interesting fact is the modern taxing system by the federal government of Nigeria, you can trace back to as far back as 1939, when the company's income tax ordinance was created. So that's more modern, right? So I just thought to start with that, and then so we'll go deeper into our conversation today, right? So tax, according to the national tax policy for Nigeria, is a monetary charge on the person or entity's income, property, or transaction, and is usually collected by the defined authority at the federal and state level, usually, which is a monetary burden laid upon individuals or property to support government expenditure. In a nutshell, tax exists because there's government. Government needs funding to be able to carry out the functions that's been articulated based on the constitution of this country, right? Now we're all aware that we have 3 tiers, the federal, the state, and the local government, generally speaking. For each of these, they have different functions. They have different jurisdiction they monitor, or they supervise, or they provide the services to, right? And they need money to carry this out. Hence why to fund that activity is to levy institutions or individuals. So when I say entities, whether an Akindele or an organization or a registered business, as the case should be, right? Doing business in Nigeria. And I'm carefully saying, I don't want to go into too much into theoretical, but I'm also carefully saying doing business, because now with the Finance Act, you might be in Moscow, but because of the fact that you've created an app and specifically created for Nigerians to sell things to them, then you need to also pay taxes, right? So tax was created to fund the activities of our government, right? To be able to, some of these activities protect the citizenship, make social amenities available, infrastructures, and all of that, right? To fund it was why taxes were implemented or are in place. And there are always also regulations and statutes that make these taxes enforceable and also guide how they are administered, right? So that's the summary of the whole literature in front of us. So why do we have taxes, right? Which are some of the things I've mentioned already. Taxpayers' money pays for government services of all kinds, right? And I've highlighted some of them. Government requires taxpayers' fund to build public schools and infrastructures, right? It's used to cover healthcare costs for low-income families, because not everyone, government exists to be able to ensure that those that do not have high income are also protected. They have some basic elements of life that ensures that they're taken as human beings and can adequately get access to the basic things that they need to thrive, right, or to grow. Taxpayers' money is used to pay government and essential workers. So in carrying out this function, our dear president will not be able to be in Lagos market, to man the cars driving into the Lagos market and ensure that they're orderly, right? He has a lot on his table. So he needs to pass on this authority and these activities to lower level individuals. And in doing that, you need to pay them salaries to carry out that function on behalf of the president, because the buck stops on this table, right? So taxpayers' money is used to pay government workers and essential workers. Those are sweep the road, because Barry can't sweep all the road in Nigeria alone, right? It needs to employ, pass on this responsibility to all the people, and also pay them for that service. Government uses taxpayers' money to cover the cost of governance by paying, right? Taxpayers' money is used to ensure national security, which is very, very important, internally and externally. We internally, the police force, right? We also need to find a way, the government needs to find a way to cover the cost of the services our policemen provide to us, and also nationally, the forces we have. So based on the several laws and acts, which I don't really want to go deep into, major elements or major administrators of taxes. We have the Federal Internal Revenue Service as an administrator, right? And they've been empowered by law, like I said. And FIRS deals with certain taxes that apply nationally, right? So a popular one is VAT, which I'll talk about at some point in time to shed more light on that. And some other ones. And then we have the state internal revenue service, right? We're putting Lagos here because obviously I reside in Lagos, so it's easy for me to make them a point of reference, hence why. But each state has its own internal revenue service, and then we have the local government authorities, where they also help manage some other smaller jurisdiction or areas within each state. And all of these administrators have been empowered by law to carry out their duties. So sometimes some types of taxes paid by Farmcrowdy, which I would say will be similar. So I'll mention a few ones that I expect to be similar to whatever business we are leading or we're driving, right? So income tax, and this is personal income tax. And then one of the elements of this is the pay as you earn, which is applicable when you've gotten to the point where you've bootstrapped and then you have employees, right? And once you engage one person, right, then the need to have this tax compliance is triggered, right? So you need to register with the appropriate internal revenue service within the state where you are operating from, right, or where your staff will be operating from, because it has to do with the place of residence. So I might have a business, right, and I have my employee or colleague working in Kaduna, and that's because for that particular function I have for him, he needs to be working on the farmland in that place, so he actually resides there. Then it means I need to register with the Internal Revenue Service of that location, because that's his place of residence, right? And so that we can remit it, because there's no point remitting to Lagos. The guy's contribution, his effort to go to Kaduna, where he will need the state to provide basic amenities he needs and for his family to thrive in Kaduna. So if you play it that way, then you can see why the act or the laws says, it should be your place of residence for the state internal revenue service. So basically, all businesses must pay tax on profits of. So the income tax, the payee one is for the employees, and then you have the annual one, depending on how your entity was registered. So if you register as a company, right, then it means you also need to remit taxes, which we call company income tax, right? That's done once in a year, right? And a lot of things have come up in terms of supporting organizations that are startup or just starting or SME space. One of those is the fact that for the company income tax, earlier on, everybody's exposed to the same percentage of taxable of tax rates or the taxable income, right? 30%. But thankful to our legislation right now, because now you have a situation where if you have not hit a particular threshold, 25 million in a 12 calendar months, right, then you are exempted from having to being charged the company income tax. And then from 25 million to 100 million is a certain percentage, and then above 100 million is a full 30%. As the case would be. So it's good to be around in the year of startup, if you're just starting in the year 2020, or like earlier on, where you'll have been exposed to too many routine tax compliance activities. Withholding tax. So withholding tax it doesn't have a law on its own, but it supports the company income tax, and also, generally speaking, because what happens is government realized that, look, we can't continue to wait for 12 calendar months before we see if you're liable to any taxes and if you have any liability to pay. So they said, look, how can we get some money coming in to run the businesses or to run governance ahead of those 12 months? So that's why withholding tax came. And what happens is, for an institution registered as a company, once it engages vendors, right, is expected to withhold some amount of money. ahead as it's paying them, depending on the services, depending on how the vendor is also incorporated, right? So some of them will go to the state internal revenue service, some to the federal. And the purpose is, those will happen, you transact with your vendors monthly, periodically, so at least some small money is dropping in the government's purse to be able to fund activities on a monthly basis, as so having to wait only till the end of the year. And the benefit of that is, at the end of the day, whatever is withheld is going to be deducted from that vendor's total tax exposure at the end of the year. So like you're paying your taxes in advance, right? So that's also a good one. So that also exists. Then the value-added tax, which we're all very familiar with, and we moved from 5% to 7.5% in terms of the rate. But obviously we should be, because I'm in AgTech, I need to also state that, there are certain commodities that are exempted, or services also that are exempted from charging the VAT. So for instance, if you're a farmer and you are dealing with raw production of raw commodities, yam, rice, and all of that, and right from the farmland to your customer, then you're exempted to charge VAT. And in addition, the Finance Act has also said, look, if you're that small, medium enterprise business, not yet hit the 25 million turnover or revenue, then you are exempted from having to charge or collect and remit this. And then the company income tax I mentioned before, while discussing the personal income tax for the employees. So I'll quickly talk about how Farmcrowdy has tried and put a structure around ensuring tax compliance within the organization. First is by working closely with professionals and consultants who are grounded in tax law and guidelines. So we don't joke with that. One of the key reasons I was onboarded on Farmcrowdy as a founder earlier on, Okeowo had the idea, and I had another business which I had consulted to before he sold successfully. With us, I said, Akindele, look, I have another idea, right? And I need someone to work with in terms of financing and also taxes, right? To show you, he also understood the importance of having that structure from the word go, right? So it's either you have someone who will be, if you are one that embracing the idea of having a team and a founding team, then some of the values that person bringing on the table on board might be the fact that he has experience along those lines, right? Just like sometimes you have, depending on the nature of your enterprise, you need to identify which are the key professions that should be a part, or industry experience that should be a part of the business, right? And then some of the work. So if one of those has to do with taxes and all of that, then you might look for a co-founder that will bring it on board, and that will be part of the deliverable for being a part of the founding team member. Otherwise, I would say start and ensure you start working with professionals. And it doesn't have to be paid for initially, because I know the next question, can I afford that, right? You look within your network, look at people you went to school with, secondary school, university, try to also pick their brains at the early stage. And then when it gets to the point where you can actually afford it, then have some of these people formally engaged by your business. Otherwise, but that's guidance at the early stage, even before incorporation, because the way you're registered or incorporated also affects or determines the kind of tax compliance you also will need to ensure. There's a difference between registered as a business name versus being registered as a company versus being registered as a partnership, right? There's even limited liability partnership now based on the new CAMA updates we had so a couple of weeks ago, right? So we started working as professionals. That was one of my to-dos, being a founding member of Farmcrowdy, right? So I took hold of that and this was my experience. And the Farmcrowdy files new VAT returns every month. That's because of the sector we found ourselves. Or we operate in, because the major thing we produce are commodities. If it's beef, if it's not beef, it's rice. If it's not rice, you're aggregating and selling ginger from farm gates to customers. So those are items that are exempted from VAT. But we also still, however, need to file the new returns prior to Finance Act, and because we had also crossed that 25 million naira threshold, right? Farmcrowdy makes statutory deductions on services rendered by clients. That's the withholding tax I talked about, right? So each time you're engaging a vendor proactively, and we could proactively determine what kind of vendor is, how is it registered, what services is it providing, what does the law say in terms of how much, it's usually 5 or 10%, but there's certain services that apply, that 5% applies to, certain services 10%, and there's certain registration. So if it's a business name, it's a certain industries, it's different rates. All of these you need to consider, right? Then we also use high technology software to disburse staff-related taxes, thereby reducing administrative work. So there's a platform we use now to handle payroll, whether the net salary paid and then the payee, remittance and pension remittance. So that's what that particular point is talking about. So basically that's how we've operated. But one key thing I would say is something called tax planning. So tax planning, I would encourage everyone to find a way to do, whether formally engage and pay for it, or get guys within your network to have that planning strategy. And what does it do? You need a combination of a lawyer and also a tax consultant to say, look, you have this business idea. What are the plans for the next 1, 2, 3, 4, 5 years? Would you be raising funds? If you're raising funds, then you automatically know your investors will rather can only put their money, or rather only put their money in a limited liability company, right? And so if it's limited, what industry would you be playing at? Who are the regulators, right? Would you need to ensure that some amount of money is factored into the revenue to pay for the taxes, right? And all of that. What tax exposures would you have? What regulations would you need to adhere to, right? So you need to have that planning, right? Because it helps you to avoid unnecessary liabilities, right? And to make sure you understand what are the basic things. And when some of these compliance will only materialize, only be triggered at certain things. I give an example. For instance, registration for personal income tax for employees will only happen when you have an employee. For pension, from day one, from the first employee, you have be encouraged to get registered with PENCOM, but it also says it now becomes an obligation after a certain number of employees, right? So the tax planning would have told you, okay, when is one, you're encouraged to do that, but when it's a certain number, you now need to do that, otherwise you're breaking a particular law. So all of those are what will be contained in tax planning. So it's like a Bible that will guide you at the early stage to know, look, what do I need to prepare myself for? What do I need as I'm engaging vendors? I need to proactively let them know, hey guys, I'm building a business that's going to live longer than you can imagine. So when I'm paying you, I'm going to be obeying the taxes and deducting certain amounts and remitting it and showing you an evidence, because it's going to be in your favor anyway, right? So all of those things will help when you've had the tax planning done at the early stage. So what happens if there is failure to comply to the taxes? Defaulters will be liable to pay compound interest in certain cases, which will be higher than the initial amount due, obviously. So you're paying the amount due plus interest and all of them. So penalties also. Defaulters can be slammed with fines, true. Defaulters can be prison depending on the extent of default, which is true. All of these cases we've experienced before. So it's easier and cheaper to avoid all of these things, because it also disturbs your focus on the business. It's a distraction, right? And you don't want that distraction where you're bootstrapping, you want to focus, you want to prove your concept, you want to get into the market. You don't want unnecessary distraction because you didn't comply with certain taxes that you could have if you are proactively taking time to understand the taxes and then understand what you need to do. So advice for tech entrepreneurs regarding taxes: classify your business correctly at the point of incorporation. Very important, like I said, because the way the business is registered or incorporated determines the need to be compliant with certain taxes. Hire a professional accountant, right? When you can, I would say. Before that, at the minimum, look within your network and see who can give some free advice, at least 1 or 2, guide you at the beginning, and then once you're able to afford it, make sure you engage a professional accountant with the requisite experience. Carry out a tax planning exercise, which I'd also mentioned is very important. It's never too early. from the time you are conceptualizing the idea and it's like, oh, I'm going to go with this idea, right? Discuss with your lawyers, discuss with the tax consultant, right? And let them guide you through the implications of what approach you'll be taking to materializing your idea. Make use of tax filing software. A few of them exist, so you can start doing that. Keep adequate records, very important, right? Very, very important. And that's from the time you have the idea, the meetings you're going for, keep all records, monies you are paying from out of your pocket, and all of that, because more than ever before, I've seen a lot of cases where the founding team had actually incurred a lot of money spent, but they didn't keep tab on it. And investors come in and say, hey, I didn't know about that. It's not in the records. You can just say, I spent some money here, but I can't remember. I don't have the invoices. So adequate records is required, whether for tax purposes, financial reporting purposes, bookkeeping purposes, investor relation purposes, for all purposes, right? Keep adequate records of your business. So that will be it from me.
Awesome.
Thank you.
Thank you so much. Thank you so much for that, Akindele.
Yeah.
God bless you.
You're welcome.
Think that is a very, very insightful breakdown. You know, I was even planning that I probably was going to talk about some things regarding the tax. We've covered everything essentially, but it's good because first of all, we have quite a number of people here, and I know that when it comes to taxes, you know, people are always seeking information that are specific to them. In fact, during the application process, there is a section there where we require people to, you know, send in their questions, like what really are you looking to solve, you know, through this event. So we have a number of questions which I'm going to be taking. But just before we go into that, so I'm going to share I'm going to just touch on some things that you touched on very briefly and emphasize on them so that, you know, there are core items that people, especially entrepreneurs in the tech space, must pay attention to. I'm going to touch on those. Then I'm going to, you know, raise the questions that were asked in the applications, and then I'll provide answers to some of them. I can refer some of them to you as well, Akindele. Then you provide some answers as well. Thereafter, we're going to take questions from you know, members of people that are watching. But by the way, when that time comes, so everyone who is watching and listening, you could just use, even right now, you could just use the raise hand function. So you're going to find the raise hand function somewhere on your screen. So just raise your hand. Once we take all the questions that were asked during the registration phase, then we can acknowledge you. You know, once we acknowledge you, unmute your mic, show your video. Then you have 30 seconds to ask your questions. We have about, you know, 32 minutes to deal with all of this. And I'm sure that we're going to manage that time effectively because I know that we are all busy business people and we're very, very time conscious. All right. So, but just before I go into the question, let me touch on a few things that Akindele referenced. With regards to tech businesses, right? He has talked about the fact that one of the major taxes that you need to pay attention to is the personal income tax. In the case of your employees, we call that the pay as you earn, payee, essentially for short. The reason why this is important, I'm emphasizing this because for tech entrepreneurs, you need to be more mindful of this because unlike other forms of businesses that are just adjusting to remote work and all of those things because of COVID, for tech entrepreneurs, you must be mindful of this because for us, historically, right, we have always embraced remote work. There are tech entrepreneurs who have employees that live in Abuja, that they're based in Lagos. Business is based in Lagos, but your employees are in Abuja, Kaduna, Ogun State, Ondo, Enugu, different places, even abroad. Right? So you have people all over the place. Now, here's the thing, because payee, just like Akindele said, must be paid. The tax, the personal income tax, which is the payee for the employee, must be paid in the state where the employee is resident. You as a business must ensure that that is done. So what that means essentially is that you have to make remittances to, so for instance, assume that you have 5 employees. One is in Lagos, one is in Kaduna, one is in Kano, one is in Enugu, and the last person is in Ondo. You have to pay the payee for all the 5 of them across all those places. This is the reason why this information is specific to tech entrepreneurs, because to other type of businesses, if you're a manufacturing business, for instance, it is highly unlikely that you would have employees that come from out of state. to come work within your organization. But if you're a tech entrepreneur, you need to be mindful of this. This is an important thing because you don't want to be in a situation where you say, oh, we're paying our payee, we're taking care of our employees, and you're paying it in Lagos State, and then tomorrow Nigeria becomes better, tax authorities in other states become more efficient, and then they come to you and they say, hey, you are owing us money from Ondo State, and you're thinking, how is this even a thing? Please, could you confirm that you can still hear me?
Yes, we can.
Absolutely. Great. Then the second thing I wanted to mention is that whilst personal income tax focuses on payee primarily, there's also another angle to it, right? Which is the direct assessment. So there are two forms of personal income tax. Payee is the first one, which deals with the personal taxes. What it essentially means is the personal taxes of all the employees that work in that organization. The direct assessment is the personal taxes for the owners of that organization. So if you're a founder, you're a co-founder, you are a shareholder in that business, you have to pay your direct assessment in the state that you are resident. Now, why should you be bothered about this as a business? Now, if you're a founder, you could choose to put yourself on the payroll, right? That's fine. However, the law recognizes that because you're a founder or a co-founder or you're a shareholder, you are going to be part of the people that would benefit from the profit of the business. The profit is also part of your income. So you will be assessed, that's why it's called direct assessment. You will be assessed directly on the total income that you generate from the business. Either be that just salaries or a combination of salaries and share of profit or other benefits that accrue to you as a founder. While your payee remittances should be done on a monthly basis, as you saw on Akindele's slide, you have to remit on or before the 10th of the following month. Your direct assessment is done at the end of the year, right? Because again, you have to take into cognizance the financial performance of the business, the share of profit, and all of those things. But here's the thing that I like to advise everybody. Nigeria, whether we choose to admit it or not, in some areas, especially in these areas of tax monitoring, compliance, efficiency, we are actually getting better. The government is getting smarter. Even the government is incorporating technology now into their own processes. For the first time in Nigeria, at least at the Lagos State level, it is not effective yet at the federal level, but at the Lagos State level, we're now able to pay our taxes online. So the system is getting better. You don't want to get caught, you don't want to be left hanging. So please pay attention to those things. Akindele also mentioned that if you're a small business, you haven't reached the 25 million threshold, you will not pay company income tax. That is correct. If you're between 25 million and 100 million in turnover, your company income tax will be 20%. Then if you're above 100 million in turnover, it will be 30%, which is the standard. The other thing I wanted to mention is, Akindele mentioned quite a number of things. You could get professionals to advise. We at Enterprise Deal will offer you free tax advisory as a tech business, right? Advisory generally on what to do, how to do it is free. If you then want to engage us to, transact those, to handle those functions for you, then there's a paid service for all of those. So things like your tax filings, your tax negotiations in cases where you have default, even your financial accounts preparing, these are services that render. The tax planning that he mentioned, the annual tax planning, very, very critical, especially in this year 2020, where there's been quite a number of changes in the Nigerian laws. You have the Finance Act, there was a change in that regard, there was a change in KAMA, and these things affect businesses, so you need to be mindful of that. If you need our help, send us a DM. Then what else did I want to mention? So even in the case of Farmcrowdy, where because they're an agricultural business, they're an agri-tech business, right? And as far as the law is concerned, as far as VAT is concerned, now because a lot of people confuse this, these exemptions apply to business, apply in terms of VAT. So if you're a business and you are involved in essential goods, right? Just like Farmcrowdy, it's essential goods, it's agriculture, right? You're exempted from paying VAT. However, you still, as you can see from Farmcrowdy's example, you still have to remit. You still have to file your new returns and say, oh, we're an agribusiness, we're filing nil. You still have to submit his documentation that shows that nil, like it doesn't apply to us. Even though the form says you should show your income and everything, and then at the end of the day, you just show that, oh, you are this type of business and you, so please, that is still very essential. The reason why, we're sharing this and we have set this up is because as the country progresses in its compliance functions, especially the tax agencies, LIRS, FIRS, every single one of them, a lot of us as entrepreneurs, we are still running with the mentality of Nigeria as usual, Nigeria as we always know it. And what the government does, right? I know this because this is the problem that was solved for entrepreneurs, is that they make these changes. There is not an enough level of sensitization, and they just come and begin to, so it's like a trap is set for people. And you're not aware, you're just doing your own thing, and then you just end up falling into traps that you're not even aware of. So please be mindful of those things. What else? Okay, I was going to say, oh yeah, there's agri-tech, just like Farmcrowdy is. There's ed tech, there is health tech. Now, you see, when it comes to value-added tax, there are some services that are essential. The government deems them to be essential services, so you don't charge VAT on them. This is basic food in the case of agriculture, tuition for educational services, which education is essential. Medication, if you buy medication or things like medical equipment and things of that nature, right? If you trade in those things, then you're exempt for VAT, which is the reason why when Akindele mentioned, and I wanted to emphasize this, when he mentioned that the way you register your business really matters a lot, it is critical. He is not joking. Because if, for instance, you're in health tech and you did not register properly, and then tomorrow you come and you're claiming, oh, we are VAT exempt. If the government says present your registration certificate and they go through your documentation and you are not registered accordingly, you are going to be forced to pay money that you are not liable for, technically, right? So please be mindful of these things. Over the coronavirus period, the FIRS created a window where if you come pay the backlog of taxes that you owe, they were going to forgive all of your penalties that you have accumulated over time. There was a client that we dealt with during that period. Her business over the 2 years of operation, right? Predominantly, it was still startup phase, so they weren't generating revenue yet. With tech businesses, you're still developing, you're prototyping, all of those, but at least they were a registered company. In that 2 years, they had only generated revenue. I think the revenue they generated was 70,000. So the actual VAT on that revenue was 3,500. But because they had not remitted at all, not done anything, their compound taxes was 760. Compound penalties was 760,000 naira. Imagine incurring 760,000 naira because of 3,500. It is ridiculous. Right? But here's the thing, like they say, ignorance is not an excuse under the law. You need to be mindful of those things and you need to take care of them as soon as possible. So I'm going to go very quickly to some of the questions that were asked. So somebody has asked that, are there specific tax laws that apply to marketing and advertising companies? I can answer that very quickly. When it comes to marketing and advertising companies, there's no specific provision for you guys. The same tax laws apply to those kind of businesses. Then somebody says, at what stage should I start paying taxes as a new business? Akindele, I'll let you answer that.
What time would I start paying taxes as a new business?
Yes.
I mean, so with the Finance Act, right, a lot of things have changed. All you need to do is register, right? So for instance, you've not crossed 25 million naira threshold. Once you've incorporated, you shouldn't charge VAT yet, right? But the point where cumulatively for a number of months, in a calendar, 12 calendar months, right, you've now crossed that 25 million. That's when that compliance is triggered. But if you've had an employee from day one, personal income tax, pay as you earn is already triggered, right? So that's why these are the things that guide you in tax planning. So I would say from day one, if you have an employee, you start deducting appropriate taxes and then remitting same to the appropriate state internal revenue service. But in terms of VAT, the Finance Act, I said, is when you cross that threshold, is when you are liable. You need to ensure the compliance with that particular act.
Fantastic, fantastic. I think perfect, guys. That is just the answer to the question. But I'm going to add this to it. You see, once you start your business, even though, so don't pay VAT again, just like Akindele said, from the start date, but you have to start remitting payee if you have employees from the get-go. However, one thing that is important to emphasize again, Akindele has mentioned it earlier, did such a fantastic job, is this: you must keep your financial records. It is very essential, because even the taxes that will be charged, that you'll be liable for after like a year of operation, will be based on the financial records. And there are instances where, you know, your business legitimately didn't make the money, or maybe you did not make the profit, or you didn't bring in the revenue in that financial year, but because you don't have records, you're not able to defend certain things, and then you still end up paying. See, compliance is cheaper than non-compliance. Please, compliance is cheaper than non-compliance. The kind of tax issues that we get to deal with on a daily basis is just ridiculous. If you're looking at it from the standpoint of the entrepreneur, it's very ridiculous. But from the standpoint of the government, the law is the law. That is what they're going to say to you. Another question is, how many tax organizations are we to pay to? I think Akindele has mentioned that primarily you have the FIRS, which you pay VAT and company income tax to. And then you have the LIRS, or all the other states' IRSs. So LIRS is Lagos Internal Revenue Service. If it's Ondo, it is Ondo Internal Revenue Service. But LIRS is who you pay direct assessment for your employees, and things like that go to the LIRS. And then depending on the local government that you're in, there are some small, you know, local government taxes that you have to take care of as well.
So in addition to that, for employee-related taxes, there are other bodies. You have the ITF, you have the NHF, you have the NSITF. Those have to do with employee-related taxes. The pension, for instance, I mean, your employee would choose the PFA, like the pension fund administrator. So I can use, without mentioning names, any of the brands. And then it's your job to deduct that contribution from each salary and the employer's contribution and remit it to the PFA your employee has chosen. So that's another one. So there are different other agencies, especially when it has to do with managing employee-related taxes.
Fantastic. And those things you talked about, those are compliance issues. You see, when it comes to the money that you're paying directly to the government through FIRS, LIRS, those are taxes, right? But outside of taxes, that's why it's called tech, tax, and compliance. You can't miss them out. So outside of taxes, you have compliance issues. The law mandates that, you know, you have a pension, you know, arrangement for your people. You have all these other things that you mentioned. So please be mindful of this. And then the last question that came in from registration. So someone asked about SCUMO. The scope of this conversation doesn't cover SCUMO, and it was very particular about the gaming industry. SCUMO is essentially an EFCC check to be sure that you are legitimate. So you would have to engage with EFCC directly. They're going to have some requirements that they're going to ask you for, and then you just have to provide that. Essentially, they just want to validate that you are legitimate. You are not a scheme for money laundering, which we know that is a problem in our nation. And somebody is asking, you know, that how do you go about taxes? Here's the thing: it's a very simple process, but you know, it's better professionals do it for you, because it could get muddled up sometimes. But once you register your business, and I want to sound this note of warning to everyone: once you register your business, register your tax identification number at the FIRS. Now, one of the things, the reason why I'm emphasizing this is many times when you start a business, because the next thing is you want to open a bank account, some banker will say to you, oh, you need TIN, would help you generate TIN. And then, you know, you pay them some money, they'll just generate the number for you. Many times this is what we found. They generate the number, but your file, because the registration is not properly done at FIRS, you don't have a file at the tax office. Yeah. Yeah. So even when you pay money, it's just floating around the government account. You don't have a file. There's a registration process. There are documentation that you need to submit. So don't pay money to any banker to just go generate some number for you, because at the end of the day, you will still have to go and do the proper registration if you want the file, because FIRS needs to give you what is called the VAT certificate, which is a letter that comes from FIRS stating your TIN, your tax identification number. Please, this has cost a lot of people many heartaches down the road. So please be mindful of this. Once you register with FIRS, you have to do your registrations with LIRS as well. So you have to register your company as a taxpayer, register your directors as a payee, and then find out what the taxes are. VAT is 7.5%. We already talked about company income tax. For the payee and direct assessment, the figure is not a straightforward figure. It's a staggered calculation. So you have a professional do that for you, or search for the template online. Or if you want the template, you can send a direct message to Enterprise on Instagram. We're going to send you the template. But again, once you do that computation, you then make your remittances. For VAT, you have to make the remittance on or before the 21st of the following month. For payee, you have to make the remittance on or before the 10th of the following month. And for the other ones, they are pretty much annual. Then for withholding tax, you mentioned about withholding tax. Essentially, withholding tax is not a tax on you. It's a tax on your supplier or a vendor that is providing the service to you. It's a way that the government uses to bring people into the tax net. So somebody is offering services to you. The law asks you as a company, withhold a certain percentage of what you're supposed to pay them and pay it to the government on their behalf, right? So that, by that arrangement, they cannot claim that they were not in business. That's the first advantage. The second advantage is what Akindele mentioned. Governments have cash flow coming in trickles, and then the third part of it is that for that person, at the end of the day, they can get to deduct that total sum from their own tax burden at the end of the year for their company income tax. So those are the questions that have been asked. Then somebody asked here in comment, somebody has mentioned that TIN is now on the certificate of incorporation. Yes, that was a recent update that was done with the recent changes. Yeah, that is so true. That is so true. But then I still needed to sound that note of warning because some people still fall into those traps. Someone says, in case the business owner is not living in the country, what happens in that case? Akindele, do you want to talk about that?
So I guess the question has to do with personal income tax. And the general saying is Nigeria has certain treaties with certain nations, right, to avoid double taxation. So you are not taxed twice on the same income element, right? So what we've done is you get a professional accountant to, what the accountant will confirm is first is the country of your residence. Do we have a treaty with them, Nigeria versus our country? If so, then if you are for the income generated in Nigeria, right, once it suffers tax or is exposed to tax here, it would not suffer tax again at your place of residence, right? So all of that is what a professional accountant will guide you on.
Exactly. And the thing I'm going to add to that is this. Regardless of whether the founder is a resident in Nigeria or not, so long as the business transacts in Nigeria, all those other taxes, or your payee for the employees that are here, personal company income tax for the business that operates here, those will still be required. Okay, let's see. I think there's another question here. Oh, people validating. Yes, it is true that your TIN is still, but guys, please, this is where we miss it as Nigerians. Yes, your TIN is now on your certificate. Fine, right? But that doesn't say you should then go to bed. If you dealt with the sharks at the tax office before, you would know that these people, they would bring in every single trick in the book, every single law, they will throw it at you just to milk you dry. Nigeria does not have money. The government is looking for money. So it is defaulters that they are going to hang on to. So please be mindful. Yes, so someone is asking, will the slides be shared? More than the slide, the video will be shared. So we're going to host the link to this, the recorded version of this video. We're going to host it online, and we're going to send the link to every single person that registered. So please, if you did not register, please ensure that you register so that you can put in your data right in that database, and we can send you the link to the recorded. I think that is all the questions that we have in the chat section. Does anybody have a question they would like to ask? So just use the raise hand function so that I can acknowledge you, and then we can bring you on the screen and you can ask your question. Anyone? We have quite a number of people here. Do you have a question you'd like to ask that is specific to your business? Because I believe that also always helps, where you're able to ask questions that are specific to your business and you can get answers that are specific to your business. Okay, so Oloto Enterprise, I see you. Please unmute your mic, show your video, ask your question in 30 seconds.
All right. Thank you for this session. Okay.
Go ahead, we can hear you.
Okay. I want to ask that I operate a graphic design company, and most of our services are intellectual. Like when I get a job, I do it from my head. So there's really no specific cost. So in such a case, will I regard all my revenue as how will I differentiate my profit from my normal revenue, since I don't have an office yet, so I work remotely, and all my costs, there's no actual cost aside data, of course. So how do I classify my profit different from my revenue?
Fantastic question. Fantastic question. So Akindele, go ahead.
Okay, I mean that's more of well, it's a bit of tax and also accounting, right?
Yes.
So your revenue are the invoices you've raised to your clients after agreeing on the fees, right? And if you've not crossed the 25 million threshold, there's no VAT. So you're saying, I mean, your immediate cost, the one you can identify, is the cost of data, but also your time. How are you paying yourself? If you are incorporated or registered, you need to separate your company from you, Mr. Olotu, right? A lot of times when we start up, we mix the company's account is my account. I just touch it. I spend 10,000 today, spend 20,000. If you're building a business that you want it to be self-sustainable, you need to at an early stage try to separate so that you know every month. For now, I have a plan for a year or 6 months. I'll pay myself 50,000. So that's a cost. That's another cost you don't mention. Your time. You're working late day and night. You need to charge your time to that institution, right? There's a value to your 1 hour, right? So determine what it should be taking it out. And because at the end of the day, also, you need to now keep record, like Davies also said, because that will flow into your direct assessment as payee. This is what I earn. Every other thing, if there's any profit left, will flow into the company income taxes, right? I also might assume you should keep a tab on everything. Trust me, by the time you start keeping the tab, you realize there might be some other cost, like your generator. I'm sure you're not living in Nigeria. We're still having to generate. So I think another cost for you. When you repair that generator, if most of the time you only use it for your business, when you repair it, that's a cost to you. Exactly. And petrol on it, all of that. So if you pay attention to every penny leaving, you'll find out that it's more than just data. Your laptop, that might be a capex, is a cost, right? And all of that things. So, but like you said, let's just say keep a tab on all your records, all transactions. You'll be able to identify all other costs you probably just thought is not part of it, but it is part of it.
Fantastic response. See, I'm just going to add to that very quickly. You see, Akindele has just given you the perfect answer. But you must understand that if you're a business that is growth-minded, you must build structures regardless of where you are. So right now, you're working remotely. That is fine. But one of the things that you must do, and this is financial management advice, you must see yourself as a company that has got all the basic type of costs that a company would have. Because if you do not see yourself that way, right, when that time comes, you will not be prepared to handle those costs. So for instance, right now you're working from home, but I would encourage you to charge a portion of your rent to the business. Just like Akindele said, generator repairs, fueling, transportation when you go about. Don't just see it as my personal expense. See it as the business expense. Now, here's the thing. If you account for all of those things and you're now doing and you keep records and you look at your financial report, right, you would even be able to tell that maybe you're probably not even making enough money because you're not taking cognizance of all of your costs. You're thinking you're making so much money and it's just good for you because you are making enough to take care of you. But if you factor in a percentage of your current rent, I know that you don't use your rent only for business, a percentage of your current rent, things that you spend on, even sometimes you probably take trainings online that you pay for. The company should pay for that. All right. So these are some of the things that you can factor into your cost, because what it does is it puts you into a habit that allows you to see your business bigger than it currently is. So if after factoring all your costs, you see that your business is technically making losses, even though those costs are not actual money that you are giving out and you have the money in your pocket. But you can see that it's technically making losses. From then, you can begin to say, oh, we need to improve this business. We need to find new ways to generate revenue, because when we grow, as we are planning to, because everybody's planning to grow, when we scale as we are planning to, we will not, this current revenue level is not going to be able to take care of us. Fantastic. Thank you very much.
Thank you very much.
Angela Olua has a question. So Angela Olua, unmute your mic, show your video, 30 seconds, ask your question.
Right. Hello. Good afternoon. Do you hear me? My name is Angela Badaru. Thank you for the.
We can hear you loud and clear. Go ahead.
Okay. Yeah. Thank you for the conversation so far. So my question is to, and it may be fast forwarded to, if, for instance, I then engaged your services, it will be then. Though, would you go as far as I'm a startup trying to go lean? Are there resources or software or whatever it is that one can use to track all of this? For instance, invoices and receipting and all of those things, such that one can structure on that platform or whatever it is, or do you offer such a portal that helps one to aggregate all of inflow, outflow into one funnel where one can then pick, whether it's an Excel sheet or something? I don't know how you structure this with your engagement with customers, but yeah, it'd be good to know and how that happens, and maybe subsequently what rates this would attract.
Okay, thank you very much for that question. Definitely we do. So as an organization at Enterprise U, the number of services we render accounting related services for micro, small, and medium-sized businesses. We offer tax services as well. Now, essentially, to answer the question that you've asked, what we typically would do is we would set up an accounting software for you. There are lots of cloud-based accounting softwares, even though right now we're also currently trying to develop one of our own, which is due to launch in December. But there are few, depending on your type of business, right, that would depend what software it is that we're advising you on and setting up for you. So we set up a cloud-based accounting software for you. With that, you're able to generate invoices that you can send to your client. You're able to track all of your expenses and record all of your daily expenses. You're able to record essentially all inflows and outflows of cash into your business and out of your business. Now, once you do that, right, the software will automatically prepare the basic financial reports. Your income statement will show, your financial position will show, all of those kind of things. And based on those financial summaries, it is then very easy for you to say, okay, this is the summary, and then compute a tax based on that. Now, the services are flexible and they vary. So for instance, you could have us, we could manage that entire process for you, set up the system, you send out your data on a weekly basis. We use your data to feed into the system. We prepare your account to send you a management report. That is an option. Another option is we train you on how to use the software itself. The first part of the training would be on how to input data in there, which is a very easy process. The second would be how to study and understand and analyze the financial reports that will come out of it, so you can make the decisions for yourself. But again, there are lots of options with this regard, and I would encourage you to send either a DM to Enterprise Hill on Instagram or an email to info@enterprise-hill.com. Again, we're going to be sending you emails anyways after this session, but you can send an email to info@enterprise-hill.com with specifics about your business, and then we can propose to you 1, 2, 3 different type of solutions that can work specifically for you. So I really hope that answers your question. Do we have any other question? Any other person with a question, please raise your hand. Anyone else? Reminds me of the Troy movie. Is there no one else?
Does anyone... have a few in the chat section.
Okay, chat. So let's see. People don't. I don't know. Tech people, they always like it to cover their faces, not show us faces, and they're geeks and nerds. Okay, so let's see what question we see in the chat. So someone says, what about people? So Kayode says, what about people in the construction industry that get their materials like granite, sand, and cement from individuals? How do you go about withholding tax and all that? Akindele, did you want to speak to that?
So like I said, the first thing is there are some industries that are exempted, right? And there's also some practical application. right? They generally say if you saw that I'm buying that material, I can prove that material I bought it off the shelf, then I can withhold the tax. I'll give you an example. If Davies comes to deliver a laptop to me at my office, I'm bound to really withholding tax. But if I go to ShopRite, you and I know they work me out. If I say I'm not going to give them their full money, they want to buy laptop less withholding tax. That's off the shelf. So in practice, there are different other things. But once you engage, and different other things apply to different industries as well. So construction is also one that has certain provisions, right? So I would say get, whether within your network, adequate attention of someone that can guide you, and then you take it off from there.
Yeah. Sorry, we can't go much deeper because we're running out of time. Someone says, okay, so Laraju makes a comment here and says, thing comes to the CAC certificate and the FIRS will keep physical files which houses copies of your VAT document, and the files will be used to keep records of all your payments. Definitely. Thank you, Laraju, for that. By the way, Laraju works with us enterprise here. If you have had a registered business for over 10 years but haven't been disciplined in keeping the records, just as you mentioned, combining personal expenses with business, but intend to start afresh, is that a way of, this is funny, is that a way of canceling out old transactions and starting afresh? Akindele, can I cancel out my history?
No, I mean, the law says at the minimum, you must maintain the records for 6 years. But however, if for some reason they're really investigating and need to go beyond that, they will, right? So what I would suggest, I mean, you just need to talk to a professional. I can't say all of this off online, right? Talk to a professional. Do you want to start a new business and all of that, right? Because I also understand, because I've seen it, it might be difficult, honestly, be able to track what had happened. So be able to explain what happened last year, depending on how good your memory is or the kind of way you transacted with your vendors. If everything had been cash and carry, so it's a lot of work. But your simple answer is no, you can't cancel. Yes. As long as that entity exists,
you cannot cancel. Your options essentially are get a tax consultant to help you resolve the backlog. So we'll try to piece it all together, make some account out of incomplete records that you have, and then negotiate at tax offices and all of those kind of things and try to get that sorted. That's one option. The other option that you would hear, and I want to say this because you would hear it, but I don't always advise it because it is riding on the inefficiencies of the Nigerian system. What if the system becomes better tomorrow? The other option you will hear is just ignore it, cancel it, just ignore it and go register a new business afresh and start all afresh and all of that. The thing is, there are records, right? And if the government wakes up one day and decides that it wants to chase you, well, there's no statute of limitations that limits them from chasing you. All right, so one more question here. Can you speak on limited liability companies registered after 1 year in the light of the new Financial Act? Do you need to file even when revenue is less than 25 million? How do you determine this, last year or the expectation? Akindele.
Can you come again, please?
So the question is, for limited liability companies that are registered after 1 year, I mean, in light of all of the these things that's happening with the Financial Act and the changes. So his question is, do you need to file at all, even when revenue is less than 25 million? And how do you determine whether you file or not? Is it going to be based on last year's account, or is it going to be based on your projections for this year?
Okay, so practically, right, if you've not filed before and you are still below the 25 million threshold, then you are still within that. Then, in knowing when it happens, keep each 12-month calendar month, right? If you accumulate it, if you cross that threshold, then just do the right thing and start. That's the easiest way, right? So this is September. If I look at my revenue since October last year, have I crossed that threshold? Depending on when you even commenced the operations and all of that, right? But that's the easiest way to ensure that at least for whatever reason, you do not break the expectation.
Fantastic.
So it's cumulative revenue up to the month.
I totally agree with that. So just look at it. You can't base it really on expectations because nobody really knows what's going to happen. Your projections are not always accurate. Like business, I mean, nobody could predict COVID, for instance. So it's always best to base it on your last 12 months or better still your last financial year. So you're asking if it's 1 year to just look at your last financial year. Did you make up to 25 million? If you did, then it means that from the beginning of this financial year, you should begin to make, the remittances accordingly and all of that. So let's see, is there any other question? Okay, I do not think we have any other question, and we have overshot our time by another 6 minutes. So thank you very much to everyone. I'd like to say a big special thank you to Akindele for joining us today. And for those of you who don't know, Akindele is the co-founder and the CRO at the mighty, incredible, globally popular unicorn Farmcrowdy.
Thanks for the prophecies.
Thank you so much for coming on this platform. I hope that has been worth your time, and thank you for sharing with us.
Sure. I really enjoyed every moment. Thank you.
Awesome. And thank you to every single person who has tuned in today. I really wish you all a lot of success in your businesses. One of the things that we're going to ensure is, so I saw a couple of people, I think one person sent in the DMs that they would like the template. So what we're going to ensure is we're going to send you a link. We're going to send you an email that would include the link to this video, the recording of this session. It's also going to include like a template for computing payee with a bit of an explanation as to what it is, and then also some information about Enterprise Hill and if you'd like to engage our services in one way or the other. Thank you so much, everyone. We really thank you for making out this time. We encourage you to please go out there regardless of the challenges that are happening in the environment right now. Thrive, do greatness as you always do, and let's build incredible businesses that would make Africa proud. Thank you very much, everyone. God bless you and have a good afternoon.
Thank you.
Yeah, thank you, guys. Thank you.